planning a trip, I mean, it can feel like a real chore sometimes, can it? You're jumping between all these different websites, flights, hotels, things to do. It's complicated.
It really is. But kind of sitting right in the middle, pulling a lot of those strings, is this one huge company, Booking Holdings. They're trying to make it all simpler.
Exactly. And that's what we're diving into today. We want to understand what makes Booking Holdings, that's BKNG.O, really operate, and maybe more importantly, where they're actually going.
Right. We've sifted through a ton of information for this, the reports, market analysis, forecasts, you name it. The aim is to pull out the key insights for you.
Yeah, so if you're just curious about this massive travel tech player, or maybe you follow the industry closely, well, this deep dive is for you, the learner. Our mission, cut through all that information overload.
Mm-hmm. And deliver the really crucial stuff, maybe even some surprising bits about this travel giant.
Okay, so let's start with the basics. Booking Holdings. It's an American company, right? But with a huge global presence.
That's it. U.S.-based, but absolutely global. And you'll definitely know their big brands. Booking.com, Priceline, Agoda, Kayak, OpenTable. Those are the main ones.
And their mission statement sounds simple enough to make it easier for everyone to experience the world.
Simple words, massive ambition behind them. And they tackle it with this interesting multi-brand strategy.
Okay, let's unpack that. Why have all these different brands? Why not just one big booking banner?
Well, it's actually pretty clever. It lets them target very specific groups of travelers. Think about it, different travel styles, different trip types, different parts of the world.
Right.
So each brand can tailor its marketing, its product. Booking.com is huge in Europe. Agoda dominates in Asia. Priceline has its roots in North America.
So it's like specialized tools for different jobs.
Exactly. And they can even experiment with different things like AI features across these brands separately, see what works where. It's almost like running multiple pilot programs at once.
Ah, okay. That gives them flexibility.
It does. And there's a defensive aspect, too. If one brand hits a snag, maybe bad press or an issue in one region, the whole company isn't dragged down as much. It's a bit of a strategic hedge.
Makes sense. Okay, so before we get deeper into booking itself, let's zoom out. What's the big picture? What kind of market are they playing in?
Yeah, context is key here. We're talking about the global online travel agency market, the OTA market. And it is massive.
How massive?
Well, estimates for 2024 put it at around 613 billion US dollars, and it's still growing. Projections suggest it could hit over $1 trillion by 2030.
Wow, $1 trillion. That's staggering. And how much of the total travel pie do these OTAs actually have?
They're a huge slice. OTAs handle about 40% of all global travel bookings. And if you look at all online channels combined including direct bookings with hotels or airlines, that's nearly 70% of the entire travel and tourism market. Online is definitely king.
Okay, so the trend is clearly online. What's actually driving that growth?
Several things are pushing it forward. More people getting online, smartphones everywhere, that's fundamental. Then there's the sheer convenience and the price comparison aspect that OTAs offer. People like that transparency.
Mm-hmm.
And of course, travel itself is bouncing back strongly after the pandemic. International tourism was almost back to pre-pandemic levels in 2024.
Yeah.
That's a huge tailwind.
So a big growing market.
Yeah.
But it's not standing still, is it? What are the major shifts happening within the OTA world?
No, it's constantly changing.
What?
A few key trends really stand out. First, AI and personalization. This is transforming everything.
How so?
Think AI-powered recommendations, chatbots answering your questions, real-time updates on your trip.
Me too.
It's becoming much more integrated. And interestingly, almost half of travelers say they now trust AI to help plan their trips.
Really? That much trust already?
Yeah, it's significant.
Right.
And it's driving massive investment from companies like Booking.
Okay. AI is one big trend. What else?
Mobile. It's absolutely central. Mobile bookings make up around 37% of travel sales now, and that's expected to climb towards 44% by 2029.
Wow.
And get this, over 70% of online travel traffic in 2024 was on mobile devices. Plus, travel app downloads have surged. A smooth mobile experience isn't optional anymore. It's essential.
Our phones are definitely our travel companions now. Any other key trends?
Sustainability is becoming a bigger deal. Travelers are more conscious of their impact. You see it especially in luxury travel. But even broadly, a good chunk of people say they'd pay a bit more for sustainable options.
That's encouraging.
It is. And then there's bleisure, that mix of business and leisure travel. Lots of corporate travelers are tagging on extra days for fun now.
Blurring the lines. I've heard about that.
Yeah. And one more thing, kind of related to the information overload, we talked about this idea of click fatigue.
Click fatigue.
Yeah, just getting overwhelmed by too many choices, too many websites to check. And this is where some people think AI could really step in again with these autonomous booking agents.
You mean like an AI planning your whole trip for you?
Potentially, yeah. Minimal input from you, the AI handles the details. It sounds futuristic, but it could address that fatigue.
That definitely changes the game. Does that open the door for new competitors?
It could. You might see new AI-first travel platforms pop up, and you can never count out the tech giants like Google making bigger plays in this space.
Which brings us back to Booking Holdings. How are they dealing with all this change?
Well, this is exactly why those huge ongoing investments in AI we mentioned are so vital for them. It's about staying ahead, driving growth, and honestly defending their position in this really dynamic market.
Okay, got the market context. Now let's rewind. How did Booking Holdings become this behemoth? Where did it all start?
The story really kicks off back in 1996. A guy named J.S. Walker founded Priceline.com in Stamford, Connecticut. And they launched their big idea, the name your own price model, around 97 or 98.
Name your own price. I remember those ads. How did that actually function?
It was pretty radical for the time. Travelers could basically bid on things like flights or hotel rooms. Priceline would then try to match those bids with airlines or hotels that had unsold seats or rooms they wanted to fill, but without, publicly slashing their prices.
Ah, so it helped suppliers offload extra inventory discreetly.
Exactly. And for travelers who were flexible and really focused on price, it offered great value.
And wasn't William Shatner the face of it?
He sure was. Famously paid partly in stock, which turned out pretty well for him, I imagine.
I bet. But it wasn't all smooth sailing from the start.
No, definitely not. Airlines were skeptical at first, worried it would mess up their pricing, and they had the classic tech startup problem, servers crashing on launch day because they got overwhelmed.
The rite of passage. But name your own price couldn't last forever as the only model, right?
Right. As online travel grew up, people started wanting more speed, more certainty, more transparency. Bidding felt a bit slow and opaque for many, so Priceline had to adapt.
How did they adapt?
They introduced regular, fixed price options and also something called express deals, which offered discounts but without revealing the exact hotel or airline until after you booked, trying to capture different types of customers.
So they evolved. What were some other big moments for them?
Key milestones. Well, the IPO in 1999 was huge.
Yeah.
NASDAQ listing, PCLN ticker back then, made the founder a billionaire overnight, apparently.
Wow.
Then, around 2000, they actually tried taking name your own price beyond travel, groceries, gasoline, things like that.
Really? I don't remember that.
Yeah, didn't last long. They quickly decided to refocus purely on travel. The thinking was, travel indoors, stick to what they knew.
Smart move. What came next?
They kept growing. Got added to the NASDAQ 100 index in 2009. Then a big name change in 2014, they became the Priceline Group, Inc.
Why the change?
To reflect that they were more than just Priceline.com by then. They started acquiring other brands.
Right, building that portfolio. And then the final name change we know today.
Exactly. February 2018, they became Booking Holdings, Inc. Ticker changed to BKNG shortly after. This was really significant.
How so? What did that signal?
It signaled a major strategic shift. It highlighted the massive global importance of Booking.com, which had become their powerhouse brand, especially internationally. It showed they were pivoting towards this global accommodation-first model.
Driven by Booking.com's success.
Hugely. But that success wasn't just organic. It was massively boosted by some really smart, transformative acquisitions they made along the way.
Ah, yes, the acquisitions. They've bought quite a few companies. Tell us about the key ones.
The absolute game changer was buying Booking.com in 2005 for about $133 million. They merged it with another company they'd bought, ActiveHotels.com.
And that was pivotal.
Absolutely pivotal. It took them from losing money in 2002 to making over $1 billion in profit by 2011. Seriously, people call it one of the best internet acquisitions ever. It instantly gave them a huge presence in Europe.
Incredible ROI. Who else did they bring into the fold?
In 2007, Agoda.com joined, which really strengthened their position in Asia's online hotel market. Then in 2010, Travel Jigsaw, which later became RentalCars.com, expanding them into global car rentals.
So strategically filling gaps in the travel journey.
Precisely. Then came Kayak.com in 2013 for $1.8 billion. That brought in metasearch price comparison, market insights, big diversification move.
And then restaurants?
Yep, 2014 they bought OpenTable for $2.6 billion, got them into online restaurant reservations, tapping into that whole local experience angle.
They were really broadening their scope. Did it continue?
Oh yeah. 2017 they added Momondo and Cheap Flights, boosting their flight search capabilities. 2018, Hotels Combined, another hotel metasearch player. And more recently, 2022, Get a Room for $1.2 billion, expanding their B2B hotel side.
It's like they were building a travel empire piece by piece. What was the grand strategy there?
It seems pretty clear. Fill the gaps in what they offered. Different travel types, different regions. Often buying these companies at good prices. And crucially, they've been pretty good at integrating them, making the whole group stronger than the individual parts.
Makes sense. And who are the leaders steering the ship through all this?
Well, we mentioned Jay Walker, the founder. Then Jeffrey Boyd was CEO for a long stretch, 2002 to 2013, and briefly again later. He oversaw that crucial Booking.com acquisition and integration. Really foundational.
So Boyd set the stage for that transformation. Who followed him?
Darren Hewson took over from 2014 to 2016, continued adding brands, but his time was cut short. Since 2017, it's been Glenn Fogel.
Fogel's the current CEO.
Yes.
Yeah.
And he wasn't new. He'd been involved in many of those key acquisitions earlier. He's really the one pushing this connected trip idea now and driving the big focus on AI across the company.
So it sounds like Boyd nailed the key acquisition, and Fogel is now building on that with this integrated vision powered by AI.
That's a good summary. Boyd laid the groundwork with Booking.com. Fogel's aiming to deepen the customer relationship, go beyond just single bookings, create this whole seamless experience using tech as the glue.
Okay, fascinating history. Let's get into the nuts and bolts now. How does Booking Holdings actually work today? What's the core operation?
At its heart, it's that two-sided digital marketplace we talked about. It connects travelers looking for somewhere to go or something to do with a huge global network of providers, hotels, airlines, restaurants, tour operators, you name it.
And the scale is just immense, right?
Truly immense. Just look at 2023, over 1 billion room nights booked, 74 million rental car days, 36 million plane tickets. Gives you a sense of how central they are.
That volume must create powerful network effects.
Absolutely. More travelers attract more suppliers, which in turn attracts more travelers. It's a virtuous cycle that becomes very hard for competitors to break into. Scale begets scale.
And all those bookings must mean mountains of data.
Oh, absolutely critical. Data is a core asset. They process something like 1.5 petabytes a year. They run over 320 active machine learning models.
Wow. What do they do with all that data?
It gives them incredible insights into what travelers want, how they book, pricing trends. It fuels all their personalization efforts, their AI development, and they can also provide valuable insights back to their hotel and airline partners.
So it's an intelligence engine as much as a booking platform. Now let's quickly revisit the main brands. What's the specific niche for each?
Okay, quick rundown. Booking.com, the global giant, especially strong in Europe, focused on accommodation but expanding into alternatives. They're testing that AI trip planner.
Right.
Priceline. The original U.S. focus, known for deals, name your own price, still exists alongside fixed prices. Covers flights, hotels, cars. They have their Penny AI assistant,
Okay.
Agoda, the leader in Asia Pacific, mainly hotels. They're using Gen AI internally for things like coding. Kayak, the meta search engine, compares prices from everywhere. They're very forward on AI with Kayak.ai and ChatGPT plugins. Open Table, the dominant player in online restaurant bookings, partnered with ChatGPT for recommendations, rentalcars.com, global car hire. And then you have others like Rocket Miles, Fair Harbor, Momondo, Cheap Flights, each playing a specific role.
Quite the collection. And how does this portfolio enable that connected trip idea?
Well, the idea is to leverage data and customer interactions across these brands. So if you book a flight on Priceline, maybe Booking.com suggests a hotel near your destination airport, or OpenTable flags popular restaurants. It's about creating synergies, making the whole journey smoother within their ecosystem.
Joining the dots for the traveler. Makes sense. How do they actually make money from all this? What are the revenue streams?
Primarily three ways. First is agency revenue. That's the commission they get from suppliers like hotels after you complete your stay. That was about 36% of revenue in 2024.
Okay, the traditional commission model.
All right. Second, and increasingly important, is merchant revenue. This is where Booking takes the payment from you, the traveler, directly, and then pays the hotel or airline their agreed rate. This is now the bigger slice, almost 60% in 2024.
So they handle the money up front in that model.
Exactly. Booking.com and Agoda especially have shifted towards this. And the third stream is smaller advertising and other revenues. Think referral fees from Kayak when you click through, ads on their sites, subscription fees from restaurants on OpenTable, selling travel insurance, things like that.
And what's a typical commission rate on, say, a hotel booking under the agency model?
It varies, but a Ballpark figure is around 15%. Could be lower, could be significantly higher, maybe up to 30%, depending on the deal, the property type, the market.
You highlighted that big shift towards merchant revenue. Why is that so significant for them strategically?
It's a really key move.
Yeah.
Growing from about 42% just a couple of years ago to nearly 60% now, it gives them much more control over the whole transaction.
How does that help?
Well, it makes it easier to bundle different travel components together. That's crucial for the connected trip. It allows them to offer more payment options, and frankly, it can potentially lead to higher margins for them, and they get the cash earlier. It pulls the customer relationship closer.
Okay, I see the strategic logic there. So who really benefits from this whole ecosystem? What's the value for travelers and what's the value for the suppliers?
For travelers, it's primarily about choice and convenience. Massive selection. Booking.com alone has millions of listings, including lots of apartments and homes now. It's easy to compare prices, you trust the big brands, millions of reviews help, it's often a one-stop shop, and the apps are generally pretty good. Plus, loyalty perks like the Genius program sweeten the deal for repeat users.
A lot in it for the consumer. What about the hotels, airlines, restaurants? Why do they play ball?
For them, it's mainly about reach. Booking Holdings gives them access to a huge global audience they likely couldn't reach on their own, or not cost-effectively anyway. It's a massive marketing and distribution channel. They also get tools and data to help manage their pricing and inventory. It's a major source of customers.
But surely there's some tension there. Hotels can't love paying those commissions.
Oh, absolutely. There's constant tension. Commissions are a significant cost for suppliers. And they also worry about losing the direct relationship with the customer, losing control over the data. That's why you see so many hotels pushing hard for people to book directly on their own websites.
Right, the book direct campaigns.
Exactly. So OTAs like Booking have to constantly prove their value, keep delivering those biddings to justify their take rate. It's a balancing act.
Understood. Let's talk geography. How truly global is Booking Holdings?
Incredibly global. They operate in something like over 220 countries and territories, websites and apps in maybe 45 languages. Booking.com lists millions of properties, including a huge number of alternative accommodations now, around 8 million listings there.
That's practically everywhere. Where are they strongest?
Europe is their real stronghold. Market share in some Western European countries is reported to be incredibly high, maybe even up to 75%. Booking.com is estimated to have almost 70% of the European hotel OTA market.
Wow. So most of their business comes from outside the U.S.
Yeah, almost 90% of their revenue is international. They are fundamentally a global company, despite being U.S.-based.
What are the advantages of being so globally spread out?
It provides a natural buffer. If one region has economic problems or travel restrictions, other parts of the world might be doing fine. It helps smooth things out. It also lets them tap into growth in emerging markets. And frankly, it just creates a massive barrier for anyone trying to compete at that scale. Building those global supplier relationships takes years and huge investment.
But being so dominant, especially in Europe, must attract regulatory attention.
Exactly. That's the flip side. Their deep penetration, particularly in Europe, puts them squarely in the sights of regulators. The EU's Digital Markets Act, for instance, has labeled Booking.com a gatekeeper, which comes with specific obligations and restrictions. So global strength brings global scrutiny.
Okay, makes sense. We've covered the business model, the brands, the reach. Let's shift focus to the engine driving it all, technology and innovation.
Right. And you really can't overstate how much tech underpins everything they do. The infrastructure required to handle, what was it, over 1 billion bookings in 2022? And process 1.5 petabytes of data annually. It has to be incredibly sophisticated and scalable.
They're running hundreds of machine learning models, you said?
Over 320 active ML models, plus dozens of real-time pricing algorithms. They really operate like a massive tech company that happens to be in the travel sector.
And they're investing heavily to stay ahead.
Constantly. R&D spending was over $700 million back in 2022, with a huge chunk focused on AI, machine learning, personalization. They hold a couple hundred patents globally, too, mostly in the U.S. They're serious about innovation.
We keep hearing about generative AI. How are they actually using it?
They're rolling it out across the board in different ways. Booking.com has its AI trip planner. Priceline has Penny. Kayak launched Kayak.ai. Agoda's even using it internally to help write code faster. OpenTable integrated ChatGPT for restaurant suggestions. It's popping up everywhere.
So a multi-pronged AI strategy.
Yeah, seems like it. They're building their own AI tools, leveraging their unique travel data, which is a huge asset. But they're also partnering with external AI leaders. It's smart, Spreads the risk, accelerates progress.
And how does all this AML translate into a better experience for me, the traveler?
It's all about personalization. They spent nearly $250 million just on AI recommendation systems in 2022. Booking.com's algorithms chew through 500 million user interactions a month to figure out what you might like. They claim pretty high accuracy, too.
So it helps cut through the noise, find relevant options faster.
That's the goal. Navigate the huge inventory, make the user experience smoother, hopefully get you to book, and it's absolutely fundamental to making that seamless connected trip actually work.
And AI isn't just customer-facing, right? They use it internally, too.
Yes, that's important. They're using it to make things like customer service more efficient, improve support for their hotel partners, even speed up software development. That saves money, which they can then reinvest.
What about mobile? We know it's huge for bookings.
Yep, massive investment there too. Over $300 million in 2022, just on mobile platforms. They've pushed hard to make everything mobile compatible. And people are using the apps. Booking.com's app saw tens of millions of downloads in 2023. Mobile is now driving over half their room night bookings.
Over half via mobile apps. Wow. What's the strategic benefit of that for Booking?
It's huge for profitability. App bookings tend to be direct bookings, meaning the customer came straight to their app, not via a paid Google search ad or some other affiliate. That cuts down their marketing costs significantly.
Ah, direct traffic is cheaper traffic. Makes sense. Let's talk about Kayak again. What's its specific tech role?
Kayak is the price comparison powerhouse. It scours over 1,500 travel sites, processes billions of searches a year, uses real-time tracking and prediction algorithms. They claim 85% accuracy on price predictions to help find deals.
So it's the place to go check prices. What's its value to the wider Booking group?
Several things. It's a customer acquisition funnel, catches people early in their planning. It generates ad revenue. Crucially, it gathers masses of data on market trends, who's searching for what, when, at what price. Invaluable intelligence.
And a place to test new tech.
Exactly. It's often been the test bed for new AI features like Kayak.ai or those ChatGPT integrations. They can try things out on Kayak, see if they work, and then potentially roll them out across Booking.com or Priceline.
Okay, that paints a clear picture of their tech focus. Now let's turn to the competition. How does Booking Holdings stack up?
Well, globally, they are the biggest OTA, no question. Dominant force. Interestingly, in the specific U.S. travel agencies market, their share looks smaller, maybe 5–6%. But they're tagged as a rising star there, suggesting they're gaining ground. Globally, against their listed peers, they capture over 30% of the revenue.
And Europe is their fortress.
Absolutely. That near 70% share for Booking.com in the European hotel OTA market is huge. Their scale gives them massive advantages: bargaining power with suppliers, brand recognition, efficiency.
But who are they actually fighting against day to day?
The most direct competitor globally is Expedia Group. They also have multiple brands: Expedia.com, Hotels.com, Vrbo for rentals. Expedia is traditionally stronger in the U.S. They're currently focused on integrating their own tech platforms and growing their B2B side.
Okay, Expedia is the traditional rival. Who else?
Airbnb, definitely.
Yeah.
They completely shook up accommodation with the peer-to-peer model, especially for rentals and now experiences. They have a big chunk of the vacation rental market and are pushing into longer stays too.
So direct competition on the alternative accommodation side.
Yes, and increasingly on the broader platform play. Then there's Google. Not an OTA in the same way, but hugely influential.
How so?
Through search, obviously, but also Google Hotels, Google Flights. There are things to do, feature. They can steer traffic, potentially raise advertising costs for OTAs like Booking, and Google's own AI tools for travel planning could become a real threat. It's a complex relationship. Booking spends a fortune on Google Ads, but Google could also bypass them.
A frenemy situation.
Kind of, yeah. And finally, don't forget direct bookings. Hotels and airlines are always trying to get customers to book directly with them to avoid OTA commissions and own the customer relationship.
Right. We actually have a table summarizing these main competitors and their strategies.
Yes, a helpful snapshot of who's doing what in the space.
So with all that pressure, what really protects Booking Holdings? What's their economic moat?
They have a pretty wide moat, built on a few key pillars. First, those powerful network effects we discussed. Very hard for newcomers to replicate that scale of users and suppliers. Second, massive brand recognition. Booking.com, Priceline. These are household names globally.
Okay, network effects, brand, what else?
Scale advantages. Their global reach brings efficiencies. Then their technology and, crucially, their proprietary data. All that info fuels their AI and personalization, giving them an edge. And finally, They're very efficient advertisers, leveraging their scale and data for better marketing ROI. Put it all together, it's a strong defense.
But moats aren't impenetrable, especially with tech disruption like AI.
Exactly. A truly revolutionary AI agent for booking travel could potentially challenge even a wide moat. That's why Booking's own heavy investment in AI is also defensive. They need to lead or at least keep pace with those technological shifts to protect their position.
Okay, understood. Let's shift gears to the financials. How is Booking Holdings performing financially? What's the story there?
It's largely a story of strong growth. Revenue has climbed steadily over the years, hitting nearly $24 billion in 2024, and they kept growing solidly in early 2025. We're also seeing that strategic shift to the merchant model really showing up in the revenue mix now.
And profitability, are they making good money on that revenue?
Generally, yes. Their gross margins are very high, I think in mid-80s%, which is excellent. Operating income and net income have trended upwards. There was a dip in reported net income in Q1 2025 due to some one-off costs, but adjusted earnings per share, which smooths things out a bit, grew strongly year over year.
What about adjusted EBITDA? That's a metric investors watch closely.
Right, and that's been growing consistently too, often faster than revenue growth. That suggests they're becoming more efficient as they scale, getting more profit out of each dollar of revenue. Their transformation program aimed at efficiency is likely helping there too.
Sounds healthy. How do they look in terms of debt and cash?
Pretty solid. They do carry some debt, but they also have a very large cash pile, around $15.5 billion recently. Their net debt position is actually negative, meaning cash exceeds debt. That gives them a lot of financial firepower.
Firepower for what?
For weathering any downturns, for investing in growth like AI and the connected trip, maybe for future acquisitions, and also for returning cash to shareholders.
What are the key numbers investors track for Booking?
They look closely at gross bookings, the total dollar value of all travel booked on their platforms. That hit $165 billion in 2024. Room nights booked is another big one, over $1 billion last year.
1 billion room nights.
Yeah, huge volume. They also watch marketing efficiency, how much they spend on marketing relative to the bookings they generate. That's been fairly stable, even improving slightly despite heavy spending. And that trend of increasing direct bookings, especially via the app, is really positive for profitability.
So where are they putting their money? How do they allocate capital?
It's a balanced approach. Significant chunks go back into the business, R&D, developing AI, building out the connected trip infrastructure, investing in their payment systems. They're also trying to save money through efficiency programs and reinvesting some of those savings.
And acquisitions, still on the table.
Acquisitions have been key historically. They had a big deal blocked recently by regulators, which might make them more cautious, but strategic M&A is likely still part of the playbook if the right opportunity comes along.
What about shareholder returns?
Big focus there, too. They have a very aggressive share buyback program, bought back $6.5 billion worth in 2024 alone, and authorized another $20 billion. That reduces the share count and boosts earnings per share. And just recently, in early 2024, they started paying a quarterly dividend.
Initiating a dividend. That's often a sign of maturity and confidence.
Exactly. It signals they have strong, reliable cash flow and want to return some of that directly to shareholders. It broadens their appeal to different types of investors. We actually have a table that lays out these key financial and operational metrics over the last few years.
Right, that provides a good historical view. Okay, solid financials. Let's look ahead now. What's the plan? What's Booking's strategy for future growth?
The strategy really revolves around executing that connected trip vision, making the whole travel process seamless and integrated, leveraging technology, especially AI, and evolving their commercial models, like the shift to merchant revenue and adding financial services.
Let's break down the connected trip a bit more. What does success look like there?
Success means integrating flights, accommodation, including alternatives, payments, loyalty, maybe even local experiences, all smoothly within their ecosystem. So you book your flight, get relevant hotel suggestions, easy payment, earn loyalty points you can use across different services. They're seeing good growth in these connected transactions already.
And the strategic goal is?
Increase customer loyalty, make people stick within the booking ecosystem. Differentiate from competitors like Google, who might just focus on one piece. Build that direct relationship, reduce reliance on paid search traffic, and ultimately get more value from each customer over time.
And AI is the key to making that happen smoothly.
Absolutely critical.
Yeah.
AI is needed to power the personalization, the recommendations, the seamless integration between different services. All those initiatives across their brands, the Trip Planner, Penny, Kayak.ai, are feeding into this. Their huge data advantage is key here.
We also talked about the merchant model and fintech. How does that fit the growth plan?
The merchant model gives them the control needed for easier bundling and integrated payments within the connected trip. But it also opens the door to offering more financial services. Think flexible payment options, travel insurance, maybe currency conversion, buy now, pay later. It's a move into fintech territory.
So potentially new revenue streams beyond commissions.
Exactly. Could reduce their own transaction costs, too. The CEO says they're still early in their fintech journey, but it's clearly a strategic direction. It also gives them even richer data on customer spending.
And loyalty programs play a big role in keeping people in this ecosystem.
A huge role. Programs like Genius on Booking.com are designed to reward repeat customers and strongly encourage them to book directly. When you integrate those loyalty benefits across flights, hotels, cars, experiences, it creates a really sticky proposition. Harder for customers to leave.
Makes sense. What about sustainability? Is that part of the growth strategy?
Increasingly, yes. They see the growing demand for sustainable travel options. So they're highlighting eco-friendly properties with their Travel Sustainable badge, offering greener transport options like electric cars. They've also set ambitious emission reduction targets for their own operations, aiming for net zero by 2040.
So it's both responsible practice and a business opportunity.
Right. It aligns with traveler values, enhances their brand image, and potentially attracts a growing segment of the market.
And CEO Glenn Fogel seems to be consistently pushing this vision.
Yeah, if you listen to their earnings calls, his messaging is very consistent. Confidence in travel's long-term growth, AI as transformative, doubling down on the connected trip, growing merchant and alternative accommodations, the power of loyalty, focusing on efficiency, but also acknowledging the uncertainties out there. It's an ambitious but pragmatic roadmap.
Okay, clear strategy. But what are the potential roadblocks? Let's do a quick SWOT. Strengths, weaknesses, opportunities, threats.
Sure. Strengths. We've covered those: dominant brands, global network, tech and data prowess, huge customer base, financial strength, scale advantages. The synergy there is key.
Weaknesses.
Dependence on search engines, especially Google, leading to high marketing costs, intense competition on all fronts. Integrating all those acquisitions is complex. Sometimes face customer service or pricing complaints, maybe margin pressure as alternative accommodations grow. That marketing spend is a big one, though. Huge potential in emerging markets. Fully realizing the connected trip to boost revenue per user, leveraging AI even further, tapping into new travel trends like bleisure or longer stays, growing alternative accommodations, expanding the merchant model and those fintech services. Lots of avenues for growth.
And threats.
Competition, always. Economic slowdowns or geopolitical shocks impacting travel. Regulatory pressure, especially the EU's DMA/DSA, targeting gatekeepers like Booking.com. Changes Google makes to its search algorithms could hurt them. Cybersecurity breaches are always a risk. And increasing scrutiny on ESG performance. That regulatory threat feels particularly significant right now.
So if those are the risks, how are they trying to manage them?
They have strategies for each. Operational risks. Diversification, pushing direct bookings via apps and loyalty, efficiency programs. Financial risks. Hedging, strong balance sheet, tech cyber risks, big investments in security compliance, training, insurance. Regulatory risks, dedicated compliance teams, engaging with regulators, adapting their business practices where needed.
And competition, geopolitics, ESG.
Competition, constant innovation, marketing, loyalty, partnerships, maybe M&A, geopolitics. The global diversification helps. ESG, their sustainability strategy, setting targets, responsible practices. Underlying a lot of this is the push for direct customer relationships that helps mitigate reliance on Google, builds loyalty against competitors, etc.
It sounds like they're actively working to counter these risks.
They have to be. Understanding these risks is crucial for evaluating their long-term prospects.
Okay, so pulling it all together, what's the future outlook? What are the main growth catalysts to watch?
Overall, management is confident, analysts are generally positive, citing strong fundamentals and growth potential, though cautious about macro headwinds. The key growth catalysts really are executing that connected trip vision watch for growth in connected transactions, pushing AI innovation for better personalization and efficiency, expanding the merchant model and fintech services, track the merchant gross booking percentage, growing alternative accommodations, look at room night growth there versus hotels, strengthening loyalty and direct bookings, monitor that direct mix percentage, expanding further in emerging markets, and continuing to find operational efficiencies.
So it hinges on execution across these strategic pillars.
Pretty much. If they deliver on those, the outlook seems strong. They're certainly positioned to keep shaping how we all travel.
Well, this has been a fascinating deep dive into Booking Holdings. We've gone from its disruptive Priceline origins to the global OTA giant it is today. We've unpacked its complex business model, the shift in revenue streams, its huge bet on technology like AI, the competitive battles, its financial muscle, and that ambitious connected trip vision.
Yeah, it's clear they have significant strengths, a wide moat in many ways. But they also face some serious challenges and evolving threats in this incredibly dynamic travel industry.
So here's a final thought for you, our listeners, to chew on. Considering Booking Holdings' incredible reach and their strategy to manage more and more of the travel journey through the connected trip and fintech, what does that mean long term for us as travelers, for the hotels, airlines, and restaurants? Is this consolidation, this centralization, ultimately a good thing? Does it drive efficiency and convenience, or does it risk reducing choice and competition down the line? Something to ponder.
Definitely food for thought as Booking continues to expand its influence across the entire travel landscape.
Thank you so much for joining us on this deep dive.